What's happening, everybody? I hope you all had a fantastic weekend. We've got a lot to discuss, packed in, because I'm heading to the lake. It's a beautiful day. Summer's almost here, June 21st, first day officially of summer. June 14th, this Wednesday is my birthday. The 15th is my daughter's last day. So we got a lot coming up, and it's going to be a nice week ahead. We've got a crazy market. We've got crazy momentum. We've got finally Wednesday and Friday were some banner style days where, you can kind of really sink your teeth into the trade and it works, letting it work, rather than, maybe Monday, Tuesday, and Thursday where, you start in, maybe it works, perfect and you don't really scale because there's no conviction, or maybe you start in and it just rips. And, as soon as it starts to set up, start to scale into the trade, it dips, comes back, voids that setup, and you just have to go ahead and move on and wait for the next setup. So that's probably been a lot of what I've done the last 2-3 weeks. Like I said, I had one massive swing trade, QBTS, obviously. And then the rest of the day trades in this kind of slow grind market have all been, you start in, you scale in, it lasts for 5-10 minutes, then comes back, trades voided, move on. So it was nice. It was a breath of fresh air for me. Not that I can't trade in a steady kind of grind market. It's just I have to trade smaller on the long side, wider stops, let things work, be okay with chasing, and all that kind of stuff is against what I typically like as sort of my A+ setups and what fits with my personal personality. So anyway, definitely good stuff last week. AHI, another one that probably, smoked a lot of short sellers. That's one of those that you have to pay attention. If it closes under 75 cents and it has that outlier volume and it has that sort of look, it can go circuit to circuit to circuit to circuit. The odd part about AHI was there was no real exit. There was never, and I mentioned that, even when it started to come back down, the volume candles were not that massive. And you would expect something like that to just blow everybody out, one candle, and then, start to sort of come back down. But even into the close, it pulled back, and then after hours, it went again. So it's going to be interesting to see sort of how this unwinds throughout the week. But regardless, be careful. It's a pretty wild one. So let's see. Yeah, I would say the biggest thing last week was behaving, right? Behaving on the front side of the move. It's so easy to, sink your teeth into that trade and really like, all right, this is the day. It's coming. And then it starts to go the other way and you start to just, I'm going to see what it does. And then it swipes through that prior resistance and then you fight it from there and, outlier moves, outlier craziness. So CVNA, 1980s, we discussed that. That's a looking left, just like PLTR. And I'll discuss that in a few when I put on the screen record. The screen records, I've been getting a lot of feedback that you guys love it. So I'm going to do, some of that today as well. But like I said, it'll be a quick one. I know I've done like 40 minutes on the last couple, so I should fly through this. What else did I have for notes? I think that's it. I said I was picking a bunch of winners this week. So Icon Meals, you guys know every single day that's what I eat. Todd is a great dude, and he's in the chat. We actually have an interview with Todd coming out very soon, I think this week. But a lot of you guys might have met him at Traders for a Cause, which reminds me, by the way, Stan won that. I've already emailed you on Icon Meals. However, Traders for a Cause, that reminds me. Tonight at 6 p.m., Traders for a Cause is tweeting out the date. Save the date. It is November 10th to the 12th, that weekend. It's later than usual, and the reason for that is we contacted them, and they're literally booking into 2024. Post-COVID, everything was, kind of dead, and then after COVID, everything is just, nobody can keep up. So we had to pick and choose, and we're doing it at the Mirage this year instead of the Wynn. Looks very similar as far as the space. And they weren't able to we would have to end up moving rooms at the Wynn, and it just was a pain. So We are switching venues this year. We're going to try something new, and it's also a little bit later as well. So hopefully that works for everybody. But again, it's going to be either 3 or 4 weeks before we do the tickets. But, as I've said before on Sunday videos and everything, I mean, we literally sell out in 24 hours. So if you are thinking about going, if you are interested in going, you will need to act fast. We will have the early bird special for the first X amount of tickets or whatever it ends up being. Then there'll be some other ones. And then there are times later on that we have a couple extra tickets. And the reason for that is we've saved some for sponsors, right? And so if a sponsor gets 10 tickets and then they only are taking 2 people or 4 people, we might have another 6 to 8 tickets to give or to sell. So we do keep these events to, we're not trying to get thousands and thousands of people there. It is, a very intimate style event. There's a lot of one-on-one discussions and a lot of people meeting each other and networking and all that good stuff. So I feel like if we allowed, lowered the price and allowed everybody to come and went up to 1,000, 2,000 people, then I don't think you'd get the same thing out of, what you get currently. So, all right. Other than that, we've got Scans. I said Scans I would be giving away. Scans is the, basically scanning tool that I use. And, I set up all the parameters and things like that. That is Eddie Loomis on Twitter. And, also related to Scans, I've always used Scans. I've always used Trade Ideas. But a lot of you guys don't even realize what we've been creating at IU. So, most of the members at this point probably should, but if you haven't, venture over to that little red, I don't know if you can see it on here, but there's a red button right here. And those are all our in-house scanners that we've literally created from scratch. And, they start with one idea, and I don't know how Max does it, but he always just makes them better and better and better and better. And it's just an absolutely phenomenal tool, which is pretty much my main source of finding trades now, realistically, which I never thought I would say that. I thought it'd be cool to have a couple additional scanners here and there, but what Max has created is second to none. It's fantastic. So otherwise, t-shirts, Philly 501 on Twitter, Travel Trading with SJ on YouTube, and TJH on YouTube as well. So, other than that, we had a couple of questions sent in. I'll go through those. I'll go do the screen record. We'll get right into the week ahead. Hey, Nate, I love the show and the secret tips that come along with it. How do you analyze the volume on a daily chart? What we saw on MGOL this week is that high volume pumps the stock, and then the second day lower, red candle makes a new high, then sells off. So a lot of times with MGOL, what you have to be aware of is, has it run before? What is the market rewarding, right? So the market, sometimes it rewards low float. Sometimes it rewards AI plays. Sometimes, like a sector or a theme, oil names, whatever. So you have to understand, what could be causing it to go. What is the market like right now? Are they chasing everything? And, understanding the market environment that you're in. So we had that nice ramp up. And, anytime that it starts to go, if it starts to spike, I want to sell at least, at least a third or a half. And then just in case it does, one of these. And then if it starts to continue to soak and firm up again, I can rescale into that position. And that's exactly what I did on that one. Next day, because it had such a strong close, typically if I'm looking at something as a potential gapper or some sort of breakout in the close, the stronger it closes, the more I want to sell. Because that means, 1, all the covers are coming in, 2, all kinds of chasers are coming in, and 3, the gap that I was expecting potentially overnight has now almost, kind of done it into the close. So the stronger it is, even if I miss out on opportunity, the stronger it is, because I want these sort of ideas to kind of come by surprise. And if everybody's doing the same thing and it doesn't work, it's going to be twice as bad, right? So then the next day it consolidated a little bit, and then we had round 2. And round 2 sometimes comes with T+2. Sometimes it's the third day, sometimes it's the fourth day, depending on how thin, depending on how many failures to deliver. But it does enough to ramp up, get shorts in, hold trend, and if it starts to go, it does just enough to squeeze out everybody that was left maybe from the prior 2 days. Once that exchange comes in, it's just like CVNA. It's just like anything, right? Where believers become doubters, and then those doubters become believers. Exhaustion move, fades off. And that was the exact trade that you saw on Friday from me. Question for Sunday Scan. Do you short as aggressively on small cap pump and dumps during bull markets? Do you feel there is still a reliable short setup in bull markets? Absolutely, there's a reliable short setup in bull markets. That's usually the time where things last a little bit longer and give us better opportunities. But the same kind of comment, the same thing that I hit every single week on these Sunday videos is my size is reserved for CVNA, PLTR, AFRM, SOFI, all those style names, PTON, where it's not going to just be one swipe. Obviously, there's market risk, and a headline could come out at any time. And personally, that's why I like to spread across those 5-6 different names and scale. That way, I'm spreading the risk. I'm basically betting on the market fade, but I'm spreading across these 4, 5, 6, 7 different names because I'm eliminating my single name risk, right? So there could still be risk on one. And if I went, 4x the size that I have, then that could be a terrible trade. But if I spread across all these names that should technically do the same thing, then it reduces my risk and I can put more money out there more confidently, anticipating this unwind, following this unwind, joining the trend on the unwind. But in the event that, and as you guys know, these PRs can pop up at any time. In the event that happens, at least it's a little bit less aggressive because maybe I only have a quarter of the size that I typically would on that one name, but it's spread across, so I still have the same amount of dollar value in the markets working for me. But like I've said multiple times, I am not trading small caps as large as I used to, unless it's like some super thick name. It's just not worth it. And I find that there's a lot of headache, especially if there's 1 or 2 names. And that's another thing that I repeat a lot. 1 or 2 names, small caps that are up. Those are the flavors of the day. If there's only 1 or 2, everyone is focused on those. If there's 6, 7, 8, 9, those are the days that I want to focus in on, which ones are the 2 that are pretty crowded, and then focus in on the rest. And those are the ones that are going to pay out much better than, trying to figure out what's going on with this 1 or 2 small caps on the day. They get super, super choppy, super crowded back and forth. Next one, for the Sunday Scan, is there a standard way to trade halts, a guiding principle, signs to interpret in a meaningful way, or straight up crapshoot? I know to manage risk, always just looking for an edge. Thanks for all you do. So Sean, I think the biggest issue with some of these is, on the circuit halts. If it closed under 75 cents, I prefer to just, if I'm going to trade it intra halt, it's going to be really small size. You have to see it break down under certain key levels in order to have any conviction. And if it starts to reverse, you have to go ahead and just punch out. Because when it closes under 75 cents, the circuit bands are extremely close. And so it doesn't take much. Sometimes it could be a couple cents, right? Dip, rip, we're in a circuit halt. Everybody panics, opens up, panic. And then it goes into a dollar move. And, the problem is stuff like AHI, very, very easy to trade 25, 50, 100,000 shares or more. And the market supports it. The price action supports it. The volume supports it. But most people don't account for the potential of a circuit. And all of a sudden that trade becomes really bad really fast, especially when the candles were 200, 300, 500,000 volume at max most times. So it's very hard to, do the right thing right away. And then you end up becoming the market risk because you're trying to cover all this size. You're shoving it into the next circuit halt. So that's why you saw me in IU. I was like, number 1, beware of circuit halts. Number 2, don't try to play ping pong in between those circuit halts. And then later on in the day, after it faded, hands off. Don't ruin your weekend. So circuit halts, I think the best thing to do, especially even if CVNA went up there, CVNA reminds me of something like Lucid back maybe 3 months ago, 4 months ago, whenever it popped. Look, it works until it doesn't. And so you could get used to certain entries on circuit halts, but if it skips and skips, it doesn't matter. So for me, I'd rather just let that all happen and then start into my position. Last one. What do you use for a risk level once you see continued heaviness? And how far would you allow a stock to go against you? Talking about the fades on PLTR earlier this week and all of the ones that you shared. So, for example, on CVNA, PLTR, AFRM, on maybe Thursday. So Wednesday was a great trade, and they went nuts. I started in, failed follow through setup, scale, flush cover. On Thursday, same sort of setup, same sort of concept, but they did a little dip and then came back up, right? And at that point, if that stays firm, that's when I size back out, either all the way or back to the starter that I originally just had to put it on my radar. So anytime, the easiest way is and I've said this before, at what point are you wrong? Rather than having like a hard stop, like this is, no matter what, I'm stopping out here. For me, it's more of where was I just proven wrong? So if I scaled in for a flush and it absorbed, does that void my thesis? And therefore, should I still be sized up? The answer is no. So that's sort of how I would size down. Or if it flushes, comes right back up, that dip and rip now voids the prior heaviness, the prior stuff move that I saw. And you have to get used to like understanding what voids what you just saw. If it stuffs and stays heavy, that's one thing, right? Then you would let that work. But if it dips and rips and comes right back, everything you just saw is now voided because that cleared it out, right? So kind of reset the name. Just like we talk about these daily stocks that are going up. It's healthy for them to flush and come back, flush and come back. They're working out the size. They're getting in shorts. They're creating longevity for this move. Whenever things just go up, when it does pull back, this is the first moment for everybody to do the same thing. And when there's crowd, just like on the short side, when it goes nuts, when there's a crowd on the long side, unwinds really fast. So anyway, that is a little bit of the recap and the questions from last week. And let's do a little bit of screen record and then fly right through the Sunday video. Because like I said, it's really about seeing the charts, getting prepared. But look, are we going to gap down on Monday? Are we going to gap up? And we just have to kind of see what the market vibe is. And are we going long this basket? Or are we going short this basket? And it's really, especially during earnings season, that's really what it's about. The Sunday videos or the Sunday scans, or even nightly scans for that matter, really shine outside of earnings season. During earnings season, it's just like, let's figure out what you're best at, what price range you love, and what your focus names are going to be, and just do that. And then as the earnings plays start to slow down, that's when preparation is really key. All right, guys, so for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. One of the big things that I wanted to go over was relating CVNA back to PLTR. So if you guys remember PLTR, we had a full conversation about why this 1030 level was such a key level, why it should be used as a potential stopping point, and why it could lead to the next breakout, right? So 1030, we had talked about this day right over here. I didn't take the trade, Eric did. That was the example that I used. And, high probability trade, nice unwind, flushes out, trade comes, reverses back, right? So after that trade's done, where you assume that this level is going to be the top, a couple days later, it gaps over that level. Okay, so then I changed my thesis from, potential fader to now I'm interested in the long side versus that 1030 level if it stays as support. So what was prior resistance becomes support and a good risk reward type of situation. So that's why I like that for the long. We went over that in prior videos. But my point is by studying these prior examples, you're able to apply it to other stuff that happened as, like this week. And so CVNA we talked about in IU 1990s being that super key level. And obviously you can see that 19874 was the top. I rounded up 1990s. So when 1990s is testing, you can safely assume that there's a good chance it's going to have trouble there. And it did. And faded off, held it extremely well, came back, 1990s, 20 or so, came back, faded off. But it was oddly holding, and they continued to get higher lows. So then, what does it do? It becomes a trigger point. And if it breaks, it's going to go nuts. So if you add that 1990 to the chart, you can see right here, the day that it ripped, shorts are obviously bent. And we pretty much cleared out through 1990s. We look for that clear out move, run the stops, slam back down. Great trade, great opportunity, right? But then, now you mark this low. Now you see another higher low. And every time it flushes out, it does not breach any lower, including this flush right here, right? So that's why and how you know that you need to be cautious. And on top of that, the more times that it tests, if it keeps on having higher lows, higher lows, higher lows, at some point, if it tests that, that starts to become a trigger. So you never want to step in front of this. I always like to let it blow out and then participate. Blow out, participate. Blow out, participate. This one, blow out, well, it just busted through and now it's firming up. And we've got those wicks, right? Dip and rip, continues on and blows everybody out. So this is the same strategy as PLTR. And that's why when 1990s tested in the room, I said, if you want to trade it short, go for it. But this is where outlier moves happen. And so anyway, we had a great opportunity and, nice blow off move. And again, looking left, you've got this level, basically 26 level, 2620s, whatever you want to call it, right around there. From pre-market, clear out that level, sits back, comes back, has trouble at VWAP, clean move, beautiful move, and worked out perfect. Other than that, sometimes I trade these, sometimes I don't. I always try to put them in the room so that people can kind of see and get prepared and understand, what these setups look like. So, I always like to, look at, okay, we've got this top. You don't know that top, but where is the base? Where is it having, a consolidation, and where is it soaking? So you've got this sort of attempt to maybe reverse, blows out, comes back. This is the first point where I start to like this for a failed follow through setup. Right? Let it do this. Everybody always tries to figure it out on the first flush. The problem is if you do that with something like AFRM, look at all these pullbacks, right? Start in, add. And if you're adding every single time you see it get weak, you're just adding to the problem. And then eventually they blow everybody out. You've got this big, huge move here. Blow everybody out right over here and fades off. So again, looking left, using the same concept of PLTR, CVNA, you had this AFRM trade, which you saw that I took. So that's another good example. PLTR, we went over. Uber, I did not take the trade, but you can see the same setup, right? So let it show you this. You don't have to figure that out. And then focus on where that support is. Once it starts to break, that's when I start to get interested. So underneath VWAP, probably risk towards 4070s, let the trade work until it doesn't. And again, you see a lot of these where they flush down, they start to kind of slowly grind back up. We saw that on Tuesday, we saw that on Thursday, on a lot of these moves, just like PLTR and AFRM, etc. NVIS, same deal. Again, looking left, 8 being sort of a key level. Everything over 8, probably exhaustion move. Fantastic trade on Friday. Again, nice setup over here, but starts to come back, higher lows, recognizing that it is holding better than it should have. That's the sign. Okay, I can always re-add after 680s breaks. If this continues to soak once, twice, 3 times, and you're still there, you're just hanging out for no reason, right? Yeah, it could work, but what is a better, higher probability kind of setup? cover and wait until you get 680s to break down. Let it prove to you. Otherwise, it's just soaking. We had the same deal as Sophie. Nice move off the open. Same setup. It should start to look familiar. You guys saw my trade on this. Again, I like to focus on where is it absorbing? Where is everybody soaking it up? And then where does the trade start to fail to follow through? Same deal with PTON. Should start to look extremely familiar. Same setup. Again, I'm not so concerned about where this top is. I'm more concerned about where the support is and when the support actually starts to act as resistance. And then what happened on a lot of the prior days, something like PLTR or AFRM and stuff, a lot of times you have that big pullback, but it starts to get absorbed. So, you have that over here where, it flushes, soaks up, all the dips get soaked up, and you just have to behave. So just recognize, same thing, CVNA, PLTR, AFRM, if you start to scale into the trade because you have that fail, if it starts to firm up, that's when you need to scale down. And then the only other comment that I had was, relating CVNA to AMC. And a lot of people immediately go to thinking that, it's going to be the next AMC. But the thing you have to remember is that the AMC and GME and all that, those times were just the first time that anybody's seen anything like that. And so now people are prepared for that. People are quicker to think that it's the next AMC. People are quicker to hedge. People are quicker to take risk off. Before, that was never seen before. It was a situation where people can't even get prepared because it never happened. Never happened before. But now people are prepared. Now people see this stuff and they are quickly, getting to this. Well, it's the next AMC. The quicker that happens, the quicker the cycle shifts and you get a move like this. So hopefully we end up coming all the way back down. It's a good chance that we get back into the 15s this week. But again, it's just a thought. If it flushes down further than you think and holds on, you also need to be okay with the fact that it could continue to go. So don't have too much of a fight one way or another. All right, so for the week ahead, main watches, Sophie, and these do not need a big explanation, right? Sophie, CVNA, and AFRM I have as my main watches. Pretty standard, pretty obvious kind of setups. I just want higher the better, looking for those failed follow-through setups. Maybe we have a day that we stay heavy in the markets and we can fade these things for multiple days. Or maybe we have that gap and grind day. That's the point. Is you got to come with two plans. Two plans will get you prepared. Gap up, blows out, failed follow through, weak open, potential for a rally back red to green. If you're prepared with those, then you have action both sides. I'm not trying to make a call one way or another. That's not what it's about. We're about trading something with high probability. Failed follow through. PLTR, same deal. Higher the better. MVIS, same deal. You can see that, we're kind of in these support levels. So if it stays heavy versus that 680s level, I think we can see a nice, unwind. Never underestimate something like MVIS too. We've been talking about this all week. You don't want to underestimate the rally, but also the pullback. These ones with the options tend to have this huge move up, hang around longer than you think, and then fade way further than you think. APRN should be a great trade. This one was a nice one on Friday. Had a nice trade off this, and it broke down beautifully. But I'd probably be watching. I mean, unfortunately, it pulled back quite a bit, but I'd love to see it kind of push back up. Maybe into the 840s, 850s range, this prior level of support, and then fade off the rest of the way. Nothing too exciting though. PTON, same deal. BYND, same deal. Basically, higher the better. Failed follow through. Maybe it feels like I'm flying through these, but you don't have to prepare so much in a market like this where the market is taking care of the trends. In a market when we're not in earnings plays and we're not going from one slow market to the next, and we actually have to come with a plan prepared. There's just too much going on right now. So it's really just about seeing the trades and knowing what you would trade. And you saw how having that basket ready was all you needed last week. Knowing what are the top 5 trades that you want to take, for a market pullback. And sometimes only 2 of those will be worth it. What I like to do is focus on the relative weakness. So I have got, say, a basket of 5 names. Maybe, just like this week, CVNA on Wednesday, I think it was Wednesday, had relative strength, right? And we were talking about that. PLTR did too one of the days, and then they both went the next day. Whereas AFRM and Sophie and some of the other ones had relative weakness. So I started to focus on those over the other ones. So sometimes the questions that I get is like, how do you pick your names? How do you pick which one you're going to focus on? I let them show me. So I picked the 5 that fit my style of trading, my personality, and the volume that I like. And then I let them tell me which ones are going to be the best opportunities. Last couple things, continuation side, CFRX. I would have had money that this thing was going to hold on. I actually am still long. It felt like it felt like there was a buyer in the tape, and 180s range support, mostly 190s, and I would say 190s and 215s is sort of the exhaustion level. And I know it's failed. This time just felt a little bit different. So I was up a decent amount at 215s, and now I'm probably down a dime on it, and maybe it pulls back tomorrow again. I don't know. But I did have a high conviction that, this thing was going to go. So sometimes when I get those reads, I'm right in the end, but just not the right timing, right? So I am very, very interested if it starts to firm up over 215s. I do think that it could have an outlier move. But if it doesn't, I can't sit here and force that trade to work. So I would, go ahead and move on. Same deal with QBTS. They continue to absorb it. Very minimal position left. I actually got all the way out, and then I rebought the dip, but just at a very small capacity, nothing like I had before. Fantastic trade for anybody that paid attention over the last 3 weeks. That was well over a triple, and pretty big trade. And then last but not least, note, I had a position, but I think I got rid of it. I am interested in repositioning if this holds over 250s. If it doesn't, that voids the thesis for me. But pretty nice setup. If you guys remember this day, it was a pretty wild squeezer day. Then it peaked out looking left. We are at that looking left level, so we could start a new trend. So anyway, that's it. Have a good weekend. We'll see you in the room. And again, remember, save the date, November 10th to the 12th, Traders for a Cause. Those will sell out. That's not a sales pitch. They literally did sell out within 24 hours over the last 2 years. So if you are interested, make sure you get on the list. There's a newsletter sign up. They will go to Project Impact members first for the first hour. We'll probably announce that at 5 p.m. in a couple weeks, 3 or 4 weeks from now. And then the rest will go on sale at 6 p.m. So that is a small benefit for being a Project Impact member. Have a good rest of the weekend, and we'll see you in the room tomorrow.